Good morning, everyone. Thank you so much for joining us today. We're going to give people a chance to drop in before we get started. All right, good morning. My name is Natasha Dunker. I'm Communications Director for PERAC. And today's webinar is all about the annual statement, how to prepare it, and also an overview of your cash books. Today's presenters are Karen Shea, our Director of Audits, and Scott Henderson, our Deputy Chief Auditor. Anyone attending this live event today will automatically receive 3 educational credits for board members, but we are recording it, so any board members who are unable to attend the live webinar can view it at a later date on our website and receive credits by just submitting a training affidavit through Prosper. And with that, I will turn it over to Scott. One other thing, I'm sorry. If you do have questions during the presentation, please type them into the Q&A and I will read them off to Scott. And I will interrupt him. So feel free to just type your questions as you think about them. All right. Thank you.
All right. Hello, everybody. I'm going to start this training by going over all the changes we are making in this year's annual statement. So if we go to the next slide, I'll be discussing all 0 changes. Everything's the same. There's no new accounts. Format's the same. Schedules are the same. Basically just updating the year from 2022 to 2023. We do have a blank annual statement on our website if you want to see what it looks like, because you won't see an actual annual statement during this training, but you can get to it on our website through About PERAC, then PERAC Units, choose the audit unit, training materials, and the 2023 annual statement. All right, so next slide. All right, so most of you should be working on your December books at this point. So besides doing your normal entries for December and special accruals, the payables and receivables, I want to also, I'm going to go over some of the other once per year entries that you make. And all 3 of these are going to have their own slide. So on the next slide, I'm talking about the unrealized gains and unrealized losses. So this is for people who have a custodian. You're not 100% PRIT. So you have a custodian. You probably do 99% of your accounting entries from the custodian summary sheet that you get every month. But for this one entry, the unrealized gains and losses are netted on the summary sheet. So I would ask you to, when you instead of making one net entry, make a separate entry, one for the unrealized gains and one for the unrealized losses. So you can find the original numbers before the netting inside the custodian's report, or if you've already got schedules 3A and 4A from your custodian, the unrealized gains and unrealized losses are there on the schedules. The increase is the gain and the decrease is the loss. So next. There's a couple interfund transfers you should do at the end of the year. The first one is a transfer from the pension reserve fund to the pension fund. And you do this if your pension fund is going to show up as a negative number on the annual statement. So we'd rather not see negative numbers. You can transfer at least enough to get it up to 0. You can transfer more if you want. When you're looking at the general ledger, the pension fund should be a credit balance. If it's a debit balance, then it's going to be negative. You also want to do, sorry, go back a slide. You also want to make an entry for if you have had non-vested members who have been inactive in your system for 10 or more years. Clear their account out of the annuity savings fund, send the money over to the pension reserve fund. People always ask why they should do this. Well, the statute tells you to do that. So that's the answer. I don't know why the statute tells you to do that, but there's lots of things in the statute. I don't know why they tell you, but so that's found in section 11, 3, that entry. Okay, next. Interest due and accrued. It's very important if you do have it. Lots of people don't. Again, if you're 100% crit, you're not going to have to deal with interest due and accrued. But if you get schedules 1, 2A, and 3A from a custodian, it's very likely that you do have interest due and accrued. So next slide, we'll start going over what the entries are for it.
I do have one question, Scott. Do you
Oh,
need PERAC approval to transfer from the PRF to the pension fund?
I I would make the entry without asking specifically for approval. I know the actuarial unit, their appropriation letters used to give you amounts to transfer, but they actually removed that column from their appropriation letters. But instead of emailing John Borak asking if you can transfer $2 million, I would just go ahead and make the transfer. So interest due and accrued. So you look at schedules 1, 2A, and 3A, you see that there is a number there. So what do? Well, before you do anything for this year, you want to get rid of any balance you had sitting in there last year. So to get rid of last year's balance in 1550, that's a debit to account number 4820 and a credit to 1550. That gets 1550 back down to 0. And you make the new entry for this year's interest due and accrued, debit 1550 and credit 4820. Next. So 4820 is not an account that you use during the year. You may not even realize it exists. But at the end of the year, the closing entries for the gains, losses, and income all close into 4820. And then the interest for all the funds gets dispersed out of 4820. You don't use 4821 this year because you're going to book the income or the interest due and accrued when you receive it next year. So you don't want to use 4821 for that twice in 2 different years. So we're just using 4820 in this year. Next. One thing that's come up a lot this year that I've gotten questions on is with a software provider offering people the chance to pay for 2 or 3 years of fees and save some money on years 2 and 3. And so boards are wondering, is it a payable or receivable? What is this? It's a prepaid expense, and we do have a general ledger account set up for it. So you should be using 1350 if you're going to be paying multiple years of a software fee. Those of you who are renting office space, you might already have money in 1350, depending on what the landlord required when you started renting. So on the next slide, we have, well, you set, or yeah, you set up 1350 this year with using cash and 1350, and then in 2024 you're going to lower 1350 by crediting it, and the debit is going to be 5311 service contracts. And if you pay 2 or 3 years, you're just going to do 1 year's worth in the next 2 or 3 years. Another question that's come up on this is that cities and towns are apparently limited in the type of prepayments that they can do, but this limit does not apply to retirement boards. There's lots of things that boards can do that cities and towns can't, especially in like the investing world. So this would be another thing. Chapter 32 does not prohibit prepaying for expenses.
I have a
So,
question, Scott.
yep.
What about the scenario where the prepaid software expense in 1350 is non-refundable?
well, you'd still, whatever year the money is for, um, you lower 1350 each year as it happens. Uh, I don't think it matters that it's not refundable. I guess if you switch systems and there's money in 1350, ask at the time that happens. But I think you'd still handle it the same way. Your service contracts account would just have, you know, two payments instead of one if you ran into something like that. I hope that answers your question. All right, so now getting within the pages of the annual statement, one of the first ones is balance tests. This is three different ways of looking at the debits and the credits, the ins and the outs, receipts and disbursements during the year. And so they should all be the same ending number once you do your subtraction. So the next slide, we start going over what happens if they do not have the same result. What should you be looking for?
I just had a comment in the Q&A regarding that 1350, that if you walk away from the contract, you would recognize the expense then.
Ah, thank
So
you.
someone's helping you out with your presentations.
Yes. Yeah. Well, at least people are paying attention. Uh, yeah. I'm not a CPA. The CPA is talking next. All right, the balance test, one of the three, or boy, worst case scenario, two of the, or all three of them have different numbers. The things to look for, I would start by looking at a post-close trial balance to make sure that all the accounts that should end the year at zero after the close actually do end the year at zero. So the accounts in the 4,000s and the 5,000s, the receipts and disbursements should all be zero after the close. So if one of them is not, then that account is causing a problem with your balance tests. The second one here is the investment income breakdown entered correctly. It's on the annual statement, you manually type in the breakdown between or for the income between the assets. So there's cash, short-term, pooled funds. And if you type a wrong number in there, you'll end up with a wrong total, and that will eventually make its way through the balance test and throw off one of the numbers. The third thing is if you use an account that doesn't come in to the closing process. So 5304 is a standard account for management fees. But if you book something to 5303 by mistake, well, the number in there kind of disappears. And when you do the year-end close, it isn't part of that close. So that now your debits and credits are not equal because it's ignoring anything you put in kind of an invalid account. So for the next slide, we have the most common thing that throws off the balance test is people make an entry where one side of the entry is one of the funds. So the 3293 through 3298 are your funds. And if they're going to be the debit, well, another fund has to be the credit. And so on the next slide, I've got some examples of here was a wrong entry and here's a right entry. So let's say you're a new administrator and you've gone through your accounts receivable and there's $1,000 that you just can't figure out what it is. It's from more than 5 years ago, 6 years ago. It's not worth spending more time looking for it. So if you want to write it off, here's what not to do. Don't credit 1398 and then debit 3297, because one of those is a fund, but the other half is not a fund. So what you want to do when you credit 1398 is use administrative expenses for the debit, and that will keep your balance test in line. The second example, if you had a refund and someone had interest not refunded and you didn't book the interest not refunded, when you issue the refund, again, what you do not want to do is debit the annuity savings fund and credit 4822. So the credit 4822 is right, but the debit, instead of being the fund, you should just use refunds. And then when the account's closed correctly, it'll your balance test will be fine. Another page that you sometimes do by hand is the page that shows the activity by fund over the year. So it has receipts by fund, disbursements by fund, and a column for the interfund transfers. There's a little kind of chart at the top, and the top half takes your accounting in the software and produces that. But the bottom half, you're supposed to list each individual entry for the interfund transfers. So please just make sure that every entry that's part of the top half netted totals is listed in the bottom half individually. Schedule A, this is your payables and receivables. The receivables are at the top. There's a list of account numbers down the side. We want you to put a date for all the receivables. That way, hopefully you'll notice if one is a couple of years old at this point, you can think about whether it should still be a receivable or not. If you've set up a receivable for people who are buying time because they're doing it over 3 and 5 year installment plans, just use December 31st, 2023 as the date for that because you're using the balance as of that particular date. And the lower half of Schedule A is the payables, again with the account numbers, and we want to see dates. And if you do have a payable or receivable that is not one of the account numbers listed on the side, both of them have blank rows at the bottom. It does say to use it for investments, but you can also use it for if you have annuities and pensions paid where you have to set up a receivable because someone died and you haven't gotten the money back after you overpaid them, you can put 5750 and 5751 on those blank rows in the receivable section. So that's how to handle them. All right. After the front part of the annual statement, the back part is the financial info. There's schedules 1 through 7, and a lot of the numbers on those schedules should match numbers in the front half of the statement. And if you're wondering who makes these schedules, well, Schedule 1 is cash. So it's going to be both a custodian and you as a board. If you don't have a custodian, again, because you're all Brit, then it's just going to be your local bank accounts on Schedule 1. If you do have a custodian, you get their Schedule 1, which has the custodian's cash and manager cash, because if the managers buy and sell things, they get cash in and pay cash out to buy things. So the custodian sends you a Schedule 1. You want to manually add your local bank accounts to the custodian's Schedule 1. Schedules 2, 3, and 4, those are all provided by the custodian. And schedules 5, 6, and 7 should all be done by board staff. The custodian might send you a Schedule 5, but we'd rather have you do your own because they tend to combine columns that we want to see separated in there. All right, so next I'm going to go over some of the things that we see when the audit unit does our review of it. We're looking for the numbers in the front matching the numbers in the back. So before you send it to us, if you want to check some of the things where it's kind of more common for us to ask you about or point out that numbers don't match, and you can do your own. So on the asset and liability page, this is a page that just has market values, but your market value for Schedule 1 should match the cash number for schedule uh, or the cash number for the asset and liability page. Schedule 2 is the short-term investments. I think that's account 1100. Schedule 3, fixed income market value should match the fixed income. 4 is equities, and Schedule 5 is pooled funds. So Schedule 5 has all the pooled funds accounts that you're using. So if you put each particular type of asset together, you have 3 pooled fixed income. So put them together and have a subtotal row for your pooled fixed income. It's easier to check the asset and liability page to see if those numbers are the same. We don't usually see many people with the market value wrong, but Schedule 1 and cash seem to often have a difference if anything does. So I would double check that one. The investment income page has, as you can see, a lot of things coming from the schedules. So 4821, the investment income. So the income is broken down into cash, short term, by the asset type. Those are the ones you manually type. But if you go to your schedules, you should see the same numbers there for one. The A's and the C's with the schedules. A is always for the items that are held as of 12/31. So at the end of the year, 2A is the short term you have at the end of the year. 3A is the fixed income you have at the end of the year. 4A is equities at the end of the year. So those have all gotten income, but the Schedule C's, 2C, 3C, 4C are also here because those are the items that you sold during the year, but while you own them, they were getting income through part of the year. So that has to also be included in investment income. The realized gains, realized is going to mean you sold the item, so that's going to be on the C's, 2C, 3C, 4C, plus on Schedule 5. And the unrealized gains, unrealized is you are still holding the item at the end of the year, so it's just a change in market value. So that's going to be 2A, 3A, 4A, plus Schedule 5. And the losses, same schedules as the gains in each kind. Schedule 7 is the one that has all the fees on it. So the disbursements page has management fees. So 5304 should match your Schedule 7 5304. My note there is that the Schedule 5 management fees may not match Schedule 7 because if you're trying to do Schedule 5 with a formula and you pay with an invoice, I would say have the Schedule 5 fees be 0. Otherwise, you'll have to fiddle with the market value formula that we'd rather not have you fiddling with. But as long as Schedule 7 shows the correct pooled fund fees, that's the one you really want to get right. The custodial fees and the consultant fees are also on Schedule 7, or on the investment income page. Sorry, those are on the disbursements page. The investment income page has the 3 columns that are on the far right of Schedule 7. The newer accounts for the alternative investments where you see carried interest, equalization expenses, and the miscellaneous investment expenses. Next. Schedule 6, it should be the easiest schedule for you to do because all the numbers are coming from schedules 1 through 5. There shouldn't be any new information on Schedule 6, but once in a while we look at ones where something on 6 does not match 1 through 5. So that's something to check too.
I have a question for you, Scott.
Okay.
Interest due and accrued. I've gotten conflicting responses. Do accrued dividends from custodian need to be set up as well?
Hmm. I'll I'll have to check with someone else. I don't know off
Okay,
the top of my head. Um,
thank
hmm,
you.
yep. Okay, that is the, let's see. Next slide. Uh, so on the disbursements page, there is a section for pensions paid, account 5751, and that number gets broken down into the type of pensions, so the superannuations, the beneficiaries, the disabilities. Check to make sure that if there's a total at the top in the row for 5751, see if that total matches the sum of the breakdown below it. The top number comes from your general ledger, and the breakdown comes from the monthly payrolls. And so I think if there's an adjustment to someone's allowance and like their individual record is not changed, that's what throws off uh, the grand total for versus the breakdowns. So just make sure for everyone you basically do an extra accounting entry for, uh, the retiree record should be changed to match the accounting.
Okay, one more question for you. If
Okay.
we get a fee invoice from Russell that separates OCIO and negotiated management fees, plus have an advisor, would OCIO go to 5307 or 5305? Advisor fees are going to 5307. Do I need to ask for a further breakdown of fees, or is the breakdown of OCIO and management enough?
I'd put the OCIO in the consultant account. Can you, if you back up 2 slides, I think that will have the uh, one more. Oh, back up another one. Okay. Yeah, OCIO would go in 5307, which if you have an advisor, you're probably putting that in 5307 as well. So yeah, I'd put them both there. And the rest of this presentation, I'm going to be talking about the supplemental schedule. So the supplemental schedule is the list of everyone who has an account in your system in the annuity savings fund. It's active people as well as inactive people. Uh, and the larger systems, it's obviously quite a large document, like 50, 60 pages, but uh, we do recommend attempting to balance the supplemental schedule through the year. And as you reach the year end, the way the deduction should work is going by the date that the members were paid. So if the pay date is in December 2023, you want those contributions on the 2023 supplemental schedule. If the pay date is in 2024, those are going to show up on next year's supplemental schedule. So don't worry about the first 2024 paycheck having pay from 2023. We're not separating it. Right. And the supplemental schedule, I think there's a couple different ways you can print it out format wise. Some just have addition and reductions, but there's another format. You can probably get one where addition is broken into a couple different columns. But the things that go into the additions, if you're trying to reconcile your supplemental schedule, there's member deductions are going in there. The transfers from the other systems are going in there. And then the 2 accounts that you use for people buying time go in there. So those are all the things that should be increasing people's accounts on the supplemental schedule. The next slide, we have the reductions. So transfers out, they're leaving you, so it's going down. And the refunds, when you're reconciling the refunds against the ledger, if someone had a refund that included interest not refunded, your entry on the general ledger should include that interest not refunded. But on the supplemental schedule, the reduction is just going to be the cash portion of what they got. So the interest not refunded part is going to end up in the transfer to pension reserve fund column. But if you're looking at the reduction column and your difference is equal to 4822, you're fine.
I have one more question going back to that OCIO question.
Okay, yeah,
Um,
I thought there were more questions in that question, so yeah. Go ahead.
It's probably from the same individuals. They say they should have asked. We don't get a custodial breakdown of the invoice. Is that necessary if we already get the OCIO and management fee breakdown?
Um, hmm, I guess not. So if there are, it sounds like if there are custodial fees, they're being put into kind of added with consultant fee or OCIO. Um, and you can see if the contract has a separate percentage as the custodial fee, but um, and we can double check with the compliance unit, but I don't see a problem with those two fees kind of being combined. Um, as long as you're not overstating 5304, that's the one to really get right. But you know, if my guess is wrong, we'll correct it. Um, all right. So back to the supplemental schedule. There's a column for interest, but the accounting part of the interest doesn't actually happen until the closing entries are done at the end of the year. Uh, and now we get into the transfer columns. So transfer to annuity reserve. This is going to be the people who retired during the year. And if you actually have someone who has gone from being a retiree to becoming active again, when you transfer their money back to the annuity savings fund, it shows up as a negative number in the transfer to annuity reserve column. The next one, the transfer to pension fund, you almost never see, but there are a couple situations where it could be used. The first one is if you have someone who's active who dies and there's no spouse, but there are dependents. So if you're going to pay out a Section 12B benefit, which is a special benefit, to the guardian of the dependents, in a case like that, the allowance is all pension. So the accumulated deductions get transferred to the pension fund to help pay for the 12B benefit. The other time you might see something in this is if somebody is retiring who received total incapacity workers' compensation. This is in the statute in section 14(1)(a), and it's crediting people with deductions they would have put in if they hadn't been on workers' compensation. But the statute says you only do this if it will increase people's allowance. And so anyone going out on superannuation will not need this because their allowance isn't going up if you give them more deductions. And if you have an accidental disability who's already hitting the 75% cap, more deductions won't increase their allowance, so you don't need to do the transfer for them. So there's not too many times you might make this transfer. If you do actually make it, it will show up as a negative number because it's money coming into the annuity reserve fund or annuity savings fund instead of going to the pension fund.
Yeah, one more question for you.
Yep.
If a disability retiree is returned to active duty, is there any accounting for this process?
Let's see. So disability coming back, they don't have to pay you anything. Um, but if they still had a balance in the annuity reserve fund, you would transfer that balance over to the annuity savings fund. Yeah, so it's not just these, yeah, right. It's not just the superannuations returning to work, it's the disabilities too, if there's still money in there. And next is the transfer to pension reserve column. Uh, so kind of already mentioned the 4822 interest not refunded shows up here. And the 10-year inactive entry shows up here as well if you're doing that. The second bullet down, if disability retirees, the group one people tend to lag a year or two. And so they've got interest well past their retirement date. So if you've got someone with interest past their retirement date, just send that extra interest over to the pension reserve fund. And the final bullet, if you have someone who wasn't active for 10 years, you did the transfer out and they're coming back, this will show up as a negative number in the column because the money is coming into the annuity savings fund. All right, and the last slide that I have is the grand total for your supplemental schedule. You want to compare that to account 3293 at the end of the year. It should be matching, with the caveat that if you do have a receivable for service purchases, then just kind of manually add that total to the grand total, and then that should equal 3293. All right, are there other questions?
Ooh. I do have one question for you, and I don't know if any others will come in. How is the money left over if member retired in prior year described under interfund transfers?
I would just describe it as like ADR retiree excess, ADR for accidental disability. So, or even just excess interest. If we see the transfer is going out of annuity savings into pension reserve, and you describe it with anything like excess interest or this ADR excess interest, we'll know what happened.
Okay, thank you, Scott. I don't have any other questions. So the next presentation is Karen Shea, our Director of Audits. I will start that in 1 second. Oh, I have one more question for you. Does the annuity savings fund total equal 3293 before closing entries or after closing entries?
After the closing entries, yeah. So if you're reconciling the supplemental schedule in the middle of the year, I wouldn't worry about the grand total. I would just worry about the individual additions and reductions, as well as the transfer columns. So hopefully, if all your individual columns are right, your grand total will end up right. But yeah, it's easiest to check post-close, the grand total.
Okay, that was our final question for Scott. He is staying until the end of the presentation if anyone has any other questions for him. But for now, I will turn it over to Karen Shea. Karen?
Thank you, Natasha. Thank you, Scott. Good job. So while Scott, good morning, everyone, I should say. While Scott covered the preparation of the annual statement, I'll be covering the submission of it and what happens after that. Next slide. So submitting the annual statement, I'll go over the preliminary review of the annual statement, The schedule 1 through 7 template, we'll look at that. Some things to remember, as in dates. I'll go over the auditor review of the annual statement quickly, and then some cash book updates and reminders. So we had this training last year, how to log into Prosper and how to submit your annual statements. And I know a lot of you have been submitting your cash books for quite a while now. So we'll kind of go over this login part kind of quickly because you probably already know how to do that. You put your username in, enter your password, and then click sign in. And then you would answer your security question that you had set up and then hit submit. And now you should see a finance tab. You would click on the finance tab. And that'll get you to the financial homepage where you would click on annual statements. And then you get to the submit annual statements. Now there's something I want to tell you about this page. There is a new, you'll see it later in the presentation, another screenshot. There's a new button added next to submit annual statements. And it is the download the schedule 1 through 7 template. So you'd be able to download the template before you even start your submission of your annual statements, but you'll see that later on as well. So you'd click on submit annual statements, and then you drop down, you go to 2023, correct year, and then hit next. Then it brings you to the checklist. So as you can see here, it's all red there. So that's because nothing has been attached yet. So you'd click on the annual statement. And here's where you want to upload the annual statement, which is, we're calling the annual statement, that's the first like 8 pages. So it's the financials that you want to upload. It's not the schedules yet, but so you'd click add attachment. And then it gets you to browse so you can find your file. And then you would pick your file that you want to upload. And then you would just click on add attachment. So you see your file there. And then it shows you that your file is there. And then you would just click close. And that'll show you now you have a green check. Well, it shows you have a green check on everything, but on the annual statement, you have a green check and it shows that there's an attachment there. You would repeat the step for all the other things that are necessary. Here is the other place. Here's the place that you could download last year. So that is still there. That download template is still in that spot. So you can download it from there as well. But now you have 2 options. So you would do it for all the other things. Now, there are some rules for what can be uploaded. So the annual statements, they must be in a readable PDF format. And that's we're talking about a computer readable one. So that is generated right from the software. Schedule 1 to 7 must be the Excel, and it must be in the template that we've provided. The supplemental schedule also must be a readable PDF, as well as the accounting close interest. And the others, these are only if they're applicable. The investors and consultants, those must be readable. We don't have, for the other docs, it could be a PDF or an Excel. Next. So once all the required documents are in there, you'll see they all have green check marks, and now it's ready for the board member certification. Next. So the board member will go in and click on certification of annual statement. And then it'll bring you up to the certification page. So on this page, where the red box is, it says go to 20, well, it would be 2023 checklist. And that will bring him back to the previous screen that we had, which had listed all the files. So they can click on the files and see what was submitted. It also requires them to fill in their name, check off the acknowledgement, and then click on sign document to sign the document. Then you would come to the next page. It'll show a green check mark that board member signed. You'd repeat this, have all 5 board members do this certification, and then it would be ready to submit. So you would go and you'd see all the green check marks, and you can hit the submit button. And then once it's submitted, you'll receive this message in Prosper that it's submitted. And you can also go back to the financial homepage, and it'll show that it's submitted. So while you're doing this, if you have any issues at all in trying to submit, please contact the Prosper help desk, and they will get back to you. So now I'm going to go on to the preliminary review after submission. So what happens when your annual statement is submitted?
Just a quick question, Karen. Actually, I have a few questions that came in. Will the checklist for board members default to 2023?
I'm not sure. When the board members go in to certify,
Yes.
yes, it will.
Okay. And do the board members also need to sign the hard copy?
We don't require that. I mean, that's up to the board if they still, if your board wants that signed, they can sign that, but we don't require that at all. Their signature, once it's certified, that's their signature.
And then one final question. Why can't board members view the monthly cash books like they can view the annual statement?
Well, we have not set that up yet. Board members have to view the annual statement in order to certify it. Cash books, they don't certify the cash books. We do, obviously, we require them to be viewed at their monthly meetings. So it's still up to the administrators to get the cash books to the board for them to review. We have not allowed them yet to go in and view the cash books through Prosper.
I have a comment regarding the signature that says outside audit firms are requesting the annual statement be signed.
Well, the annual statement is signed when they certify it in Prosper. You can go in and print out the certifications from Prosper, or like I said, specific boards can require them to sign if they're getting requests from their board, from their auditors, and they don't want to go in and copy down into a PDF the certifications, then they can have them sign it. But that's the board's choice. PERAC, once it's certified in Prosper, that's our acknowledgement that it's signed.
One more question. Does the retirement board have to vote to accept the annual statement?
Yes, they still have to do that at their meeting, yes. And then the board members will go in and certify. Is that all?
For now.
Okay. All right, so once it's submitted into Prosper, we go in and we verify that all the PDFs are readable. And we verify that the required template was used for the schedules. So last year we had a lot of them sent back because the PDFs weren't readable, or we had 3 and 4 Excel spreadsheets submitted. So the schedules are all in one template. So there's only one schedule that, one Excel that needs to be submitted, which includes all the schedules. So what happened last year, next slide, when, next slide. There we go. So when the attachments, when we realized that they weren't readable or the template wasn't used, we put the annual statement under review status in Prosper, and the administrator would receive an email notification from Prosper with the note stating what was wrong. They'd also see, if they went into Prosper, they would see that it was moved under review, and could look at the note inside Prosper as well. So once that's done, it's back in the hands of the board to fix and resubmit. So what would happen was they'd make their corrections and upload the corrected, whatever needs to be corrected, the PDFs. It was mostly spreadsheets. Last year was PDFs because they weren't readable as well. But spreadsheets needed to be corrected. So they were uploaded. They would upload them, and they would hit the submit button again to get it submitted back to us. When that's done, there's no need for the boards to sign again. So we also have a reject button. And if we hit the reject button, that would mean you would have to put in a whole new submission, have the board members sign again. But we didn't want to do that for every little thing. So we came up with this under review button, so it wouldn't have to be, if it was something material and the whole annual statement needed to be changed, then we would hit the reject button. But for most of it, it's just, we're looking to clarify a few things, or it's not in the right format.
I have another question. After the annual statement submission, if a board never receives any comments from PERAC, can we assume it's been viewed and is okay?
There will be a time where it comes back once not this review. So this is just the preliminary review. In this review right here, we're not looking at, oh, you need to go back a couple. Oh, just one. We're not looking at the numbers. We're not looking at the numbers in the schedule. We're not verifying that they match. We're not doing a review like that. That's the auditor review we do later. This preliminary one is just to make sure that the files are readable and proper forms were used, the proper template was used. Once that's all set, the auditors do a review later, and we will talk about that. I will talk about that later in the presentation. And it will change to, once it's reviewed, it will change to complete, I think. I can't remember exactly what it changed to, but I think it'll change on your things when we hit complete. It hits complete, and you'll know it's been reviewed and done. Next slide. So now I'm going to go over the template that is in Prosper. Will be in Prosper beginning next week. We have changed it from last year, so we would like you to download the new template, and I'll go over how to use it, how to enter the information, copy and paste it, and the formulas that are highlighted. I won't, Scott already has gone over, you can go to the next one. Oh, yeah, you can go to the next slide. here I'm going to show you where to find it. Here is the button that I talked about earlier. So without even starting your submittal, you can go in and download this template from the financial homepage. And next slide. And this is the other place you can find it. And that's once you've started a submittal, this will pop up and you can download it there. So either place, it'll have the same template on it. And now I'll go over a little bit about it. So I'll be going over each tab in the schedule. So this is the first tab. What you'll see when you open it, it's the board info tab. You'll see enter your full board name, enter your year here. Once you enter them in here, then it will populate to the other tabs. You won't have to enter it again. So you would enter your full board name, and I just picked Adams because it was the first one. So we put Adams Retirement Board, the year 2023. Next slide. So on Schedule 1, now you can see the very top row, annual statement of the Adams Retirement Board for the year ended December 31st, 2023. So if I had just typed in Adams in that spot, it would say annual statement of the Adams for the year ended December 31st. So you want to put in your full board name. Again, like I said, Scott has already gone over how to fill these in. So I'm basically just showing them and showing you where the formulas are. If you can see right here, we've grayed out the areas where we don't want you to cut and paste over or enter over. So for Schedule 1, you would enter the book value of the previous year. The formula will add the deposits, then add the income reinvested and subtract the withdrawals. And that should give you your balance for the end of the next year. And then it will give you your totals on the bottom of the columns. So we ask that you don't cut and paste, copy and paste over the gray area. As long as you copy the information in between the title and the formula, the subtotal, the scheduled totals formula, it will be included in the formula, and you should be able to verify that you've entered all the information correctly if your totals and your values at the end of the year match what they should match.
Karen, if a board downloaded a schedule in November, do they have to download it again? Is this a new update?
Yes, this is a new update. Yes. And if they filled it in again, they can just copy and paste it into here. If they, like I said, if they used one, if they were planning on using the one from last year, you can copy and paste that into here. But we are asking, please don't copy over the formulas. Yeah, you can go on to the next one.
And I have two attendees with their hands raised. If you can enter your questions into the Q&A. Thank you.
So we'll go on to Schedule 2A. Schedule 2, last year we changed. We had only one tab for Schedule 2, but for the boards, and there aren't that many that use this tab, it was their custodian had a schedule already set up. So we went back to what we used to have, and we broke it out, Schedule 2A, 2B, and 2C. So again, this is something, like Scott said, the custodian fills this out. So if you just copy and paste what the custodian has, except for the totals, and put it in, then the totals should appear the same as what the custodian has. And like I said, again, that's a good check to make sure all the information was input correctly. You can go on to the next slide. And same for Schedule 2B. This is just what was purchased during the year, the short-term securities. Next slide. And here we are for Schedule 2C. We can see the totals are down there, and the profit and loss will be calculated. So please don't copy over that. Next slide.
I have another question. Can we download it from either areas and then attaching as an attachment versus keying it into Prosper?
No, you do download it from, yeah, you're not keying it into Prosper, you're downloading it from Prosper. Okay. So on to 3. Again, this is same as last year. 3A is owned, 3B is purchased, and 3C is sold. We've added the formulas. So if you copy and paste, it should work out fine. Next slide. And this is just a purchase during the year. And the next slide. Same thing with this. Next slide. And it's the same basically for, it's just with the equities owned, purchased, and sold during the year. So you can go to the next couple of slides. That's good. This is just so you could really look at them and kind of see what they look like. On to the next slide. This is a pooled fund activity. And again, we have the grayed out areas. And we do have the formula which goes across the row, which calculates the market value at the end of the year. So again, just copy everything but that column, and it should calculate to what you have. And another thing we added to this is in the fees paid column. We got a lot of questions on this last year. What do we do with 4701, 4702, and 4703? This is where you add those in. And it's very important also to fill out the date of the market value through to. That was the very last column in that Schedule 5. Because some of the market value is recorded at 9/30, and then some are 12/31. It's usually alternative investments that are at 9/30 because of the late management statements. So on to Schedule 6. This is obviously the summary of all the investments. So as we would list all your investments. Next slide. And again, Schedule 7, we put the formulas in. So the total fees, total paid and accrued would equal the 4 quarters plus the accrued amount, and that'll calculate on its own for all of them. And we put in red to list the managers there. Next slide.
I have a couple of questions for you.
Okay.
In Prosper, the Excel file does not include the gray shading. When will this be available?
I said earlier, next week.
Okay. Has PERAC reached out to the custodians as to how PERAC wants the schedules presented?
We did that last year.
Okay.
Yeah.
And I think this next question is the same as the last one. When will the new templates be available? So that's next week.
Next week, yes.
Thank you.
All right, some of the things to remember: annual statements due May 1st. Contact us if you need an extension. And all 5 board members must certify the annual statement in Prosper. If you don't have 5 board members when you're submitting the annual statement, then reach out to us. And we'd have to override the submission. Next. So now we'll go back to go to the auditor's review of the annual statement. So this is done after the preliminary review and all the files are in the correct format. And this is something that auditors do in between audits and whenever they have downtime. So it's not something that gets done the week you submit it. So just keep that in mind. We are still trying to get our audits out as well. It's reviewed for consistency and completeness. This is where we find a lot of things where in the financial statements, assets and liabilities or whatever. And Scott went over some of the things we find. They're not in agreement with what's in the schedules. So the auditor will put it under review. And then when it goes under review, there's a note section that we would write our questions in or comments or whatever, and then put it under review. An email will be sent with the questions and comments included. Again, that they also can be seen in Prosper. And then it's back to you. So corrections should be made. And then answers can be added to the note section. And then you would hit the submit again. And again, there's no need for the board members to sign again. This is we're just looking for, clarification or maybe some numbers to be adjusted or whatever, but nothing material. So now we're moving on to the cash book updates and reminders. One of the things that happens if you submit a cash book late, if it's the day after it's late, it'll show up in this late box in Prosper on your screen. If you want, when you go to submit, you need to go into this late bucket and click on the submission that is listed there, because what happens is Prosper automatically creates a submission when it gets popped into the late thing. So if you try to generate another submission, you wouldn't be allowed to submit it because it would come up as submission 2, but submission 1 was never submitted. It's just generated. So if you're so the thing to know is if you are late, then go into the late bucket and click on that to submit. Don't create a new submission. Next slide. And in the additional documents section for the cash books, I know we had a problem previously. I don't think it was accepting Excel files, but now both the PDF and the Excel files can be uploaded there, and multiple files can be added there. And something else to remember about December reporting, please, for your cash books, upload the pre-closing reporting. You can include the post-close trial balance and general ledger under the additional documents, or you could include them in the other docs section in the annual statement submission. And another reminder, and this is for PTG users, to save a pre-close adjusting journal entry report before closing entries, because PTG is not able to generate this report without the closing entries once the books have been closed. So those are just a couple of reminders regarding the cash books. And now, are there any questions?
So I have not so much questions, but quite a few comments regarding the timing of the change to the schedules. Schedule 2 has now been broken out to new tabs, which you said is a new format. We have already submitted these schedules to our custodian. They updated the system to accommodate the schedules. This was not the schedule that was available. It's late to be making changes to schedules. Boards have to plan and work with the custodian. Getting update schedules in the future doesn't make sense.
Well, if you sent these schedules to, is the same one that went in, the updated schedules from last year. From most people, boards that submitted a schedule two reached out to us and said that they need the schedule separated into three forms. So probably a couple weeks after that, we were informed of that. We did put out a template with the three schedules on there. So if you have downloaded the template within the last 8 months, it would have had all three schedules on there. So schedule two hadn't changed. The only thing that changed from the updated one from last year was the grayed out areas for the formulas. That's the only thing that changed from when it was brought to our attention last year that they needed the tabs broken out. It hasn't changed since then.
Okay, so the next two questions were also about the timing of the schedule change. When does the system send the automated emails that the cash books are late? Typically, it's 30 days after the end of the month, but when does December come out, for example?
Well, yeah, you're not going to get it's going to be put in, the cash book is going to be put in the late bucket when it's 1 day late. The late notices are not going to be going out for at least 30 days. December's I don't have off the top of my head. When I think they may have already been sent out. I'd have to get back to you on that if you know who that is.
It's an anonymous attendee, so hopefully they can reach out to you. What is considered a late cash book submission? My system has 75 statements each month or quarter, so 30 days isn't a realistic deadline. Are there different deadlines depending on the investments / size of the retirement system?
No, every retirement system has the same deadline.
Follow up to the schedules change. You said that the November downloads have been changed regarding the template.
Yeah, well, they've changed due to the next one that's going to be put up on there next week will have the formulas in it. That's what's changed specifically for schedule two. That's what's changed since November, is the formulas were in there before, but they weren't grayed out. So that's
the main change. The schedule itself, the format is basically the same. It's just that it's grayed out in one column.
Yes.
The information that boards are submitting into the template is the same.
Yes.
Okay. For December cash books, do we need to submit the pre-closing and post-closing at the same time, or can the pre-closing be submitted now?
No, the pre-closing can be submitted now. It doesn't have to be submitted at the same time, because the investment unit uses the pre-closing. And then they check with they also check with the annual, when they receive the annual statement, that the numbers haven't changed besides the closing entries. So if you have a pre-closing, if you put in pre-closing cash books, and then you've made adjustments to those pre-closing before closing the book out, you would want to let your analysts know and submit. You would have to submit another pre-close. And
Right,
then,
okay, go ahead, sorry.
and then you would, you would put your post close. You would do your post close. And that, I said, that also can go in other docs of the annual statement as well. So I don't want you to hold up your December cash books to wait for your post close.
Back to the issue of the templates, if someone already downloaded the template, can they use that old template or do they need to use the updated one?
They need to use the updated one. They can cut and or copy and paste it into the updated one. We found the problem with the old template is we had the formulas in there, but everyone copied and pasted like the whole thing. So in order for us to check if ending balances were accurate, we would have to key in, across the whole row, because they wiped out the formula and all that was shown in there is a number. So this way, with the calculation in there, we know that it's adding the things that should be added and subtracting what should be subtracted. So this is why I said it's a good check for anyone, using, if they're copying, pasting the custodian's schedule, they just put in the information and not the totals. Then they can, then it should calculate out to exactly what the custodian has. So that's a check for the boards that all their information is in there.
Can you lock the gray areas in the schedule so someone doesn't forget to delete or erase it?
I don't know. I think if you lock it, there may be some way to do it, but I've only done it where you'd have to lock the whole worksheet, and that wouldn't work. That's why we colored them gray. So you see it and you realize, oh, I can go over that gray.
Next question. Yeah, lots of questions today.
Yeah.
We have in the past had until February 28th to submit the preliminary December. Will you be able to create another submission to submit the final December, which for us is usually in April due to waiting for manager report?
All right, read that one again.
We
gonna have
have had in the past until February 28th to submit the preliminary December. Will you be able to create another submission to submit the final December, which for us is usually in April due to waiting for the manager report?
So that's the post close. So you're waiting to put in. Yeah, actually, you know what? I don't think we're not really looking for, we're looking for December as soon as you can get them in. But I don't really think you get a late notice for December until after the annual statements are due. So is that what you're worried about? Because if you think about it, all December should be in before April or in April, because that would be the meeting that you would need to approve the annual statement at to get it on time for May 1st.
The next question or comment, the schedule template was sent to our custodian in August to prevent delays now at year end. Any changes made after that, our custodian does not have. I don't recall receiving any emails indicating that changes have been made. I would think most boards have sent these to their custodian by now, which means changes you are still making are not going to be updated by the custodian. Timing is important.
And like I said previously, the changes from the one, so if you sent it in August and you downloaded the one in August, that would be for the schedules that the custodian does, that would be the same. The only difference is the formulas being grayed out. So they should have the same schedules that are the new schedules, that are the schedules that are going to be put in Prosper, available next week. Again, the only difference for those schedules were the grayed out areas, showing the formulas. Previously, the formulas are in there. So that stayed all the same. That stayed the same. It's just that we grade them out so you would see them and not copy over them. So there shouldn't be a problem.
I'm a little confused on the pre-closed cash books. I have submitted and have not done any closing work. What would constitute a second pre-close?
I guess it would just be if you made adjustments to what you've already have as a pre-close. If you made any entries besides the closing entries, that would be a second pre-close. So if you have your pre-close and you've sent that in, and then you made adjustments to, I don't know, your cash account or your investment account, if you made any adjustments to those and then closed out. So if you made any adjustments, you'd want to resend a new pre-close before you did your closing entries. Because what they're going to have in the cash books, what they're going to have is your first pre-close. And then when your annual statement comes in, it's not going to match. So your cash isn't going to match what you sent in as cash, or if you did an entry to an investment, it's not going to match what you had already sent in. So they're going to have to reach out to you to find out what happened between then and then. But if you know you've made an adjustment, then you reach out to your investment analyst and say, I made an adjustment. Can you reject my December cash books and I'll submit the new one. We've had that happen already.
Some comments about the spreadsheet and locking cells, that you can lock individual cells, and our anti-spiking spreadsheet has locked areas. So we can look into that.
Yeah.
Words. What about January and February cash books being submitted? Will they all be considered late?
No, we don't. You won't get late cash book notices for January and February, not till probably after May 1st. That's when the late notices will start going out.
Okay, I think that was the last of our questions. We still had a lot of comments on the timing of the schedule, but
It shouldn't matter since
I hear you.
things that were changed, it was, like I said, just graying it out, not changing the statement or the schedule.
Is the schedule for the cash book late notices written down anywhere?
Well, according to our regulations, it's 30 days after the close of the month. We do have new regulations that the commission just approved yesterday. They have to go into the Secretary of State. And in those new regulations, yes, we have a chart which has the dates in there. So once those are issued, then you can look at the exact dates when cash books are considered late.
If the December cash books aren't late until May 1st, are January, February, March all due May 1st as well?
I can't remember exactly. It may be January and February are due then. And then March and April
Well,
due the next month. I can't remember the exact date.
I think it's January and February are due May 31st. And then probably the next 2 months, June 30th. I think it's 2 months for a while until they catch up to the 30 days after the end of the month. So yeah, we're kind of in like a hybrid world now where we have the reg that hasn't quite been approved, but Prosper is sort of using part of the reg and sort of using the 30 days. So and I think in the reg, December will be due like March 31st. So next year we won't be having this discussion.
And
Great.
this is a comment, excuse me, more for IT that we can certainly let them know. There, a request has been made if the Prosper session time can be extended. The sessions are always timing out, making completing work difficult if you're interrupted, making using Prosper frustrating. So we will let our developers know if that's a possibility. It's definitely a security issue, and that's why they have the timing built in. Increasing Prosper session would be amazing. That's a follow-up to that comment. All right, I don't see any other questions. So thank you everyone for attending. I'm just going to make sure we don't have any other final questions. Thank you everyone for attending. Thank you, Karen and Scott, for answering so many questions and your great presentation, very informative. Again, any board members who are here today are automatically receiving their 3 credits. Just check your account in about a week, and Rose should update that by then. If you, for any reason, do not see your account updated in 2 weeks, then you can reach out to Rose. But rest assured, we do get an attendee list. We download that, we send that to Rose, so she should update your account. Anyone who wishes to view this presentation later, it is being recorded, so we'll post it to the website probably next week, and we'll also upload the handouts to the website as well. And I think that is it. Thank you for your time today. Have a great rest of your day.